Hello, stock market enthusiasts. In our previous video, we spoke about what is nominal and real GDP and how investors have to be worried about the gap between the real and the nominal GDP. Now, let's understand why this matters for the investors. When nominal GDP is more than the real, this means inflation is driving growth, not real demand. For markets, that often means weak consumer purchasing power, pressure on margins, interest rates staying high, earnings less reliable. So these are the classic inflation illusion. The economy looks like it's growing, but corporates aren't seeing a real volume pickup. When the real GDP is equal to nominal GDP, like in India now, this is the most bullish macro signal. Example from our GDP numbers is like nominal GDP is at say 8.7%, real GDP is 8.2%. That means the deflator is 0.5%. How do we interpret these numbers? Growth is driven by actual production and not the price increases. Factories, services, logistics capex are genuinely expanding. Household consumption is real, not inflation adjusted. Earnings growth becomes more predictable and higher quality. This is exactly the environment where domestic cyclicals, banks, capex plays a pivotal role. Construction, industrials, autos, discretionary consumption outperform because their growth is backed up by the real economy uh, momentum and not inflation distortion. Real GDP growth sustains market cycles. A real GDP print above 7.5 means 7 to 8% means higher formalization, higher tax buoyancy, higher credit demand, rising capital utilization, etc. So this creates a multi-quarter earnings cycle even if market takes a pause. So at Elysian, what do we interpret? When we look at this GDP, we don't just read the headline. We read what type of growth is happening. So when the gap is small between nominal and real, as in the case of 8.2 versus 8.7, India is not just growing, it is growing without depending on inflation. So that is why the macro backdrop supports a positioning tilt towards domestic cycles, capital goods, industrials, constructions, banks, autos, etc. With valuation and discipline and risk management, this is where the compounding lies. If you find this video intriguing, hit the like and subscribe button. Have a super Elysian day.